This is the Asia Trade. I'm Paul Allen in Sydney.
I'm Avril Hong in Singapore.
Let's get to some breaking news. President Trump says Israel and Hamas have both signed off on the first phase of a peace plan. In a Truth Social post, President Trump says all hostages will be released very soon and Israel will withdraw its troops to an agreed-upon line. Well, let's get more on this breaking story with Bloomberg's Mike Heath. So, Mike, this just dropped a few moments ago. What more do we know?
So at this stage, Paul, it looks like and we don't have determined dates or times, but the believed to be 20 living Israeli hostages will be released by Hamas. Israel, in turn, is due to release about 2,000 Palestinian prisoners, and Israel will withdraw to some sort of, agreed line, presumably out of Gaza. And this is sort of the first phase of the peace plan. Obviously, it's a really dramatic breakthrough, getting these hostages released just over 2 years after the events of October 7th, 2023. But there's obviously a lot of very, very complicated matters to come from here. But nonetheless, from all parties, it seems to be there's quite a bit of excitement and energy about what's just happened.
Among the complicated matters, Mike, include the finalizing of the roster of the release of Palestinian prisoners. That could be something that is a more protracted process. What might that look like?
Yeah, that's exactly right, Avril, because among them are a certain number of basically life sentence prisoners, and some of these people have been involved in pretty horrific terrorist acts. So Israel, what Hamas was wanting was an agreement whereby it's time served. So whoever's done the most time gets to be released first. Israel doesn't want that. Israel wants to have a veto over some of the people who can actually be released here, because there are certain prisoners in these categories that for the Israeli government it's just impossible for them to release them. So there's going to be some toing and froing over that, and then from there, once that's sort of agreed and signed off, and presumably it has been, and then from there it's going to be, we get to the really thorny issues of disarming Hamas or governance of Gaza. There's a lot to go here, obviously.
Yeah, looking beyond the initial enthusiasm, as you described, sticking points remain. Israel started this conflict with the clearly stated aim to eliminate Hamas. Well, Hamas is still there and presumably will continue to govern Gaza. So going forward, where are we at on October 10, 2026? How does this look then? Yeah,
it's a really interesting point, Paul. It seems unlikely that Israel is going to allow Hamas to just remain in charge of Gaza. So whether they're part of some transitional group, what happens with the disarmament? Hamas has sort of indicated that they're prepared to lay down offensive weapons, but not defensive ones, whatever that means. And so there could be some fudging that goes on here. But the main thing seems to be that if Israel is agreeing that it's going to withdraw here, then I guess there must be some confidence on Hamas's side that Israel isn't going to go back in. So then there have still been enough guarantees to Israel that there will be some sort of transition arrangement, that Hamas is not going to be in the same position it was, before these events as well, before that terrorist attack. So, there's a lot to be worked out, but nonetheless, even to get to this point is really quite remarkable.
Mike, remarkable, as you say, a major breakthrough. Talk to us about the role that the U.S. played in all this, and potentially, the role that Trump played.
Yeah, Avril, this is based off of the 20-point plan that President Trump unveiled last week, and he's managed to I think generate a lot of goodwill from Qatar, with Egypt, with Turkey, to get them to really put the pressure on Hamas, and he's been doing likewise with Israel as well, to try to push them as quickly as possible, to some sort of agreement. Of course, course, looming in the background, and President Trump sort of alludes to this occasionally, is the question of a Nobel Peace Prize, which is due to be announced fairly soon as well. And one would say, given the bloodshed and all the death, etc., I mean, this would certainly advance President Trump's case there. But nonetheless, I mean, it has been a remarkable, constellation of leaders and organisation there. And obviously, President Trump sent his two envoys, his close friend, the envoy Steve Witkoff, and then his son-in-law Jared Kushner. They've both been there as well. I mean, this has all been taking place at Sharm el-Sheikh in Egypt. But yeah, really quite a remarkable gathering of leaders and putting pressure on the two sides to say this just has to happen now.
While we've been having this conversation, we've been showing pictures there of some of the devastation in Gaza, and it is extraordinary, the amount of damage, the amount of destruction. What happens now in terms of the rebuild?
Yeah, well, I mean, it's a really interesting question, Paul. But I mean, probably even before the rebuild, we have to talk about sort of aid getting into people as well, because the UN has obviously said parts of Gaza are in famine now. So the main thing would be to try and get food and medicine there as quickly as possible. Presumably, the Middle East states, whether it's Saudi Arabia or some of these wealthier countries, start to come in and finance some reconstructions efforts. But the whole place is going to have to be rebuilt, basically. I mean, it's been levelled. There's an incredible amount of destruction that's taken place over the past 2 years. And on both sides, I guess, just reflecting briefly, I mean, Hamas struck a devastating blow on Israel in that attack, but while Israel has responded horrifically as well, I mean, not horrifically, but both sides have really done some severe damage to each other there. So, really awful stuff.
On top of this potential rebuilding that is required, what is your sense of how soon, past the ceasefire, we can see a sort of normalization of relations in the Middle East? I mean, cognizant also of the fact that Israel struck some of these Hamas targets within Middle Eastern countries.
Yeah, it's a good point, Avril. I mean, look, when President Trump was announcing his 20-point plan and he had Prime Minister Netanyahu with him, one thing that did happen is Prime Minister Netanyahu spoke with the leader of Qatar and basically expressed regret about that attack in, the bombing in Qatar, where they targeted some of the Hamas leaders there, parts of the sort of negotiating team, and the Qatari security guard was killed there as well. So President Trump sought to sort of bridge that. But nonetheless, in terms of trying to move the region forward, and there's a lot of hope that perhaps there can be more recognition of Israel, and that that the whole region can sort of open up and get back to doing a bit of business and focusing on people's lives rather than war the whole time. But the stumbling point has always been Gaza, has always been the Palestinian issue. And while this war went on, while there was no chance of progress going forward, there was no way that Saudi Arabia or any of these other places, other nations, were going to recognise Israel or have some normalisation of relations. So if this can go ahead, it opens up all sorts of opportunities on that front, there's no doubt.
Mike, thank you so much for providing this context on what has really been a major breakthrough. Bloomberg editor Michael Heath. Now, for more, let's also bring in Bloomberg's Washington correspondent Tyler Kendall, who joins us on the phone from the White House. Tyler, this is quite a turn of events. These developments put things in perspective for us.
Right. So they're actually still holding us reporters here at the White House just in case there are any other further comments that we're going to receive from the administration. I was inside President Trump's only press event today when Secretary of State Marco Rubio made an unannounced appearance in the room, came over to President Trump and passed him a note. It's our understanding that the note read that they were very close to securing what we have now learned is this first phase of the peace deal before we got this post on Truth Social. And President Trump did seem very optimistic this afternoon. He actually started his events by previewing and confirming to us reporters in the room that he does intend to travel to the Middle East this weekend. It appears he'll head to Egypt, where we know that these negotiations have been taking place. And he also left the door open to potentially traveling to Gaza as well when asked directly by us reporters in the room if that was something that was on the table. We know that Special Envoy Steve Witkoff, along with President Trump's son-in-law, Jared Kushner, have really been leading these negotiations, and something that President Trump has been pushing for really since he came to office. Of course, though, there are still a lot of big questions here, including how the deal is going to be implemented and what the different factions' roles are going to be moving forward, but definitely something that the White House is touting tonight.
Tyler, when do we expect to hear from the president verbally about this, and what role is there likely to be for the US in the reconstruction of Gaza?
Well, that's going to be one of the top questions, including the rebuilding and what that governance structure is going to look like. We've previously heard from President Trump that he is going to help spearhead a potential peace commission in the region. I also have questions about what our regional partners are going to be contributing to maintaining that there will be stability moving forward. In terms of when we're going to hear from President Trump, at this point, we don't have confirmation. We have been told to still remain here at the White House, though, but all of our eyes are glued on Truth Social. As with many of President Trump's announcements, they have come from Truth Social. We really only heard from him once today, considered a rarity within this White House. He had one event where he actually ended it abruptly to leave with the Secretary of State, Marco Rubio, and then we got to this post on Truth Social.
Tyler, to your point about Trump brokering these peace deals, I mean, it's not just something we've seen with Gaza. We've seen that among other regional conflicts as well, the role that the U.S. president has played and, seeks to play up. What is your sense of how this perhaps might evolve?
Right, definitely. I mean, it's something that President Trump really did campaign on, and it's something that we hear his rhetoric heighten around, particularly when he is talking about his desire for a Nobel Peace Prize, for example. But one of the other, of course, conflicts that we're keeping our eye on is how Ukraine and Russia is evolving and how talks there are going. I was at the United Nations General Assembly just the other week, and these really were the two main parallel issues. President Trump on the sidelines, we know, had these conversations with our regional allies in the Middle East about this 20-point plan that was then released. And then at the same time, he was also confirming that he was having sideline conversations with our NATO allies about how they were going to address heightened pressure from Russia amid recent airspace violations within NATO. So sort of perhaps a parallel track to your question, that the administration is really trying to show forward progress when it comes to this. Of course, we are still waiting to see this deal implemented, but definitely positive momentum.
All right, Bloomberg Washington correspondent Tyler Kendall there. Well, let's get a little bit more now from Garfield Reynolds, who leads our Markets Live coverage in Asia. Garfield, we've seen a slight reduction or a pullback in the gold price, but can we anticipate any other market reaction in response to this news about peace in Gaza?
Well, Paul, I mean, we're also seeing a little bit of a drawdown in crude oil prices, which makes sense here. Certainly, ongoing tensions in the Middle East, that's always likely to help to support oil prices. So if this is going to, we always have to see how these things play out. We had gold and oil moving down a little bit, sort of even before the full official announcement, as speculation swirled that we were going to get one. Now we've got one. It's the first phase. We need to see what happens. Michael was outlining and Tyler was outlining some of the issues there. So markets are going to need to see that this really does take more of the tension out of what's been a very difficult situation in the Middle East. For gold to move significantly lower, and in particular for crude to move elsewhere, there's the potential that you might get a little bit of a boost to risk appetite in general. In the current climate, we might even get a slight pullback for the US dollar, because it's somehow ended up being seen as a haven of choice in the currency markets because of the concerns about French political turmoil and the impact of the shifts at the top of Japan's government. So in that situation, a slight decline in the dollar, perhaps a bit more of a boost for stocks that were already looking quite ebullient anyway. But honestly, this situation has dragged on for so long, and there's a lack of any clear, immediate path to a sort of a euphoric response to peace. This is going to be a long slog for both sides before you get anything like a lasting peace in the Middle East, would be the general assessment. In that situation, gold is probably going to bounce back at some stage. A more sustained move lower in oil, there's the potential for that, and as I said, a slight increase in risk sentiment, which would probably be welcome given some of the concerns that have been swirling around the potential that the AI bubble could be getting close to popping.
Garth, talk to us a bit more about this interplay of traditional safe havens. I mean, you highlighted there what we're seeing in the dollar, the way gold has bounced as well, and how yen, I mean the Japanese currency, it hasn't really played the traditional role as geopolitics evolves, particularly in the past year. How do you see that shaping up?
Yeah. Well, it's ironic, Avril, until the Takaichi victory over the weekend, in a lot of ways, the yen was starting to edge back towards its previous haven role because the BOJ was on what looked like finally a fairly determined path towards policy normalization. But Takaichi's victory has thrown that, into confusion. We've now got bets the BOJ won't hike this month. Maybe it will hike next month, but we'll have to wait and see. We don't even know as yet. There are some stories crossing. We're not totally sure that Takaichi will end up as the prime minister in short order anyway, so potential for turmoil there. That's going to make the yen less of a haven, and the French situation blowing up has undermined the euro. The UK faces political concerns of its own. So amid all that, we've got a turn back towards the dollar. Gold looks like holding on to its haven credentials. And in fact, Bitcoin has come back to the fore as a potential alternative to standard currency. So that's kind of the competition at the moment. If you're looking for a haven, some people will say you should buy gold and point to central banks mostly buying gold as backing for that. Some people will say, well, gold's overvalued, so look at silver, which has been outperforming gold and has some of the same characteristics. Bitcoin has come roaring back, and then the biggest surprise of the lot, the dollar looks like one of the safer options out there in the currency world, even as we're unsure when the US government shutdown might end. So amidst all that, you've got those competing possible haven assets, treasuries, of course, being part of the dollar mix. So I think you can see those sorts of assets all potentially outperforming any time that we have risk sentiment turning off. Over the longer term, there's a strong potential that gold will once again rally, and possibly also Bitcoin as well.
All right, Garfield Reynolds there, who leads our Markets Live coverage in Asia. We have more ahead on the Asia trade. This is Bloomberg.
And if you're just joining us, these breaking developments that there could be a major breakthrough in the Gaza peace plan. We're hearing from the U.S. president and how he says both Israel and Hamas have agreed to this initial phase of this peace deal. We're also hearing from the Qataris. They say that this agreement will lead to the end of the Gaza war. But of course, next steps are going to be crucial. Joining us now is Jonathan Panikoff, Director of the Scowcroft Middle East Security Initiative at the Atlantic Council. He previously served as U.S. Deputy National Intelligence Officer for the Near East. Jonathan, really good to have you with us. Give us your initial reaction to all this first.
Great to be with you. I think the initial reaction is what everybody's going to feel, which is frankly a sense of relief and positivity. It's been a 2-year war. Palestinians are beyond exhausted. The amount of destruction in Gaza is almost unfathomable. Israelis are beyond exhausted and have been desperate to get the hostages home. And so I think this, if it's true that we end up seeing the conclusion of the war, leads to a really good opportunity for what comes next to at least have a ceasefire. The question is going to be, what about all of the outstanding questions that still remain? And I think there's going to be a number of them, whether on Hamas disarmament, Hamas expulsion, Israeli withdrawal from Gaza, that we're still going to have to wait and see what the announcement outline actually says.
Jonathan, the other thing that one of our editors flagged earlier is the release of Palestinian prisoners, what that plan and the roster is going to look like. What is your sense of how this might progress?
So my sense is, from what I'm hearing, that initially the live hostages, of which there's expected to be about 20, will be released 72 hours after the Israeli cabinet agrees to the decision. Now, that could come as early as probably Saturday. It could come as late as Monday. It's just going to depend on the timeline. Once that happens, you'll also see Israel withdraw about 70% out of Gaza, so not fully out of Gaza. And at the same time, the Palestinian prisoners that you're mentioning will be released. The amount of prisoners traditionally in these swaps has always been much, much higher in ratios compared to the amount of Israeli hostages who are released. So whether that means that you end up in the mid-hundreds or high hundreds or even low thousands of Palestinian prisoners being released, I think that's what to expect. The question is going to be on some of the names and who actually makes that list. It would be a shock for anybody that participated in October 7th to actually be included. It's possible. Israel has always said no, since they haven't been tried and convicted yet. On the other hand, I think you could see some significant names that have been in Israeli prisons for, say, 5, 10, even 20 years now that are possible. Marwan Barghouti is going to be the big name to watch. He's got serving life sentences for his role in terrorist attacks, but has long been viewed as a hero of the Palestinian cause.
Jonathan, that point is a very valid one indeed, because we've been here before, haven't we? If there's any conflict on earth that has this long history of cycles of reprisals that just seem to go on forever and ever, this is the one. There are questions over the return of who these Palestinian prisoners are, the future of Hamas. Israel wanted to wipe them off the face of the earth. They're still there. Questions over how they're disarmed, questions about Israeli settlements. I mean, I don't want to go on. I could, but how enduring is any peace agreement likely to be?
I think we want to distinguish between a peace agreement and a ceasefire. This is not going to be a peace agreement that's going to be all-inclusive, that's going to resolve the Israeli-Palestinian conflict, exactly for the reasons that you just pointed out. The number of issues remaining, frankly, I think the first question is going to be, can this ceasefire even hold in Gaza? Will there be an international security force that actually comes in and disarms Hamas if it chooses and declines to disarm itself? And what will the conditions be then, if not, for Israel to disarm Hamas? Because, as you noted, this has long been a mandate that Prime Minister Netanyahu thinks he has. That's debatable in Israeli society. But his view has always been that Hamas must give up all the hostages and disarm. That second part, we're not quite there yet. So I think any ceasefire should be welcome. I think it will be welcome almost uniformly in Gaza Strip, certainly, in the Arab world, and even in Israel among the vast majority of Israelis. But we do need to temper expectations probably a little bit. The long-term implications, even the medium-term implications, I think are still a bit unknown.
Well, we have heard from Prime Minister Netanyahu in a social media post. He says, with God's help, we will bring them all home, referring, of course, to the hostages. So, as you say, there is a great deal of enthusiasm around this breakthrough at the moment. But what's the future for Benjamin Netanyahu? Because before this conflict broke out, he was facing some pretty serious questions about his leadership and his future as Prime Minister.
That's right. So I don't think the one issue that have plagued him for such a long time, the corruption issues that he's on trial for, are going to ultimately be what decides his future. The cases are actually not going particularly well for the prosecution. But Netanyahu has long been resistant to, frankly, having this sort of deal because he didn't want to lose power. And the ultra-nationalists in his cabinet, Ben-Gvir and Smotrich and others, have long said that they wouldn't support this exact type of deal, that they wanted the war, frankly, to continue for months and years to come if necessary. We've had more centrist and center-right leaders say, no, if those folks pulled out, we would be willing to come in to help prop up the government to get to a ceasefire. My expectation is that's what may happen. And unlike years ago, even a year ago, Netanyahu may be more willing to accept that now because elections are going to have to come next year one way or the other, at least by next October. But most people, myself included, think that more likely the elections will come at the latest in June. The budget has to be passed in March.
Right.
We don't think
Jonathan, we have to leave it there. There's certainly going to be political implications from all this for Netanyahu. Really good to get analysis. Jonathan Panikoff of the Atlantic Council. We have more ahead on the Asia trade. This is Bloomberg. Major breakthrough in terms of both Hamas and Israel as the U.S. president outlined agreeing to a first phase of a peace plan. Potentially, this helps a ceasefire in the Gaza conflict. We are seeing that reaction in gold or havens more broadly as gold prices pull back from their recent record highs. We did see around 40.60 on spot gold. Now, to talk us through that and the interplay of havens as markets, some shifts, longer-term shifts are underway. Senior FX reporter Ruth Carson is with us. Ruth, great to have you in the studio. Talk to us first about perhaps what this tells us about the role that some of these havens are playing.
Absolutely. And as we've seen, and as you correctly pointed out, with the action that we've seen in prices for gold and some of the havens out there that are traditionally seen as, cover in markets that are uncertain, we're seeing a pullback. I think at the moment, investors are very much jittery, so they are looking at risk sentiment very much as a barometer for how they're trading. So gold is a great one to look at, considering that it has pulled back and we've seen it go to new highs every other day. It shows you that investors are indeed turning a little bit more risk on. They're seeing the developments in the Middle East as positive, at least for today. So we shall see if that continues, though.
Yeah, look, we've got also evidence that the yen's no longer that one-way haven that it was. So how do traders now view the yen then, and what are the main alternatives to it?
Yeah, it's a very interesting story in the sense that for years, decades even, the yen has always been seen as a viable go-to haven. If there's geopolitical risks, if there are issues around the world or the US or wars flare up, people buy the yen. But that correlation is breaking down. We have seen it ebbing in the past couple of years, but now we're seeing the yen rise in times of risk on. The correlation with the VIX, for instance, is positive. And so the yen is no longer acting the way it used to. So traders have to really grapple with this paradigm shift. And it remains to be seen how it will fully play out. But I think today, for example, the price action that we're seeing and where levels are for dollar yen at 152, it's, euro yen is at an all-time high. It kind of shows, and it's a testimony to how the yen's role as a haven is indeed shrinking. Investors, as a result, have to really think of alternatives here in times of stress.
And all this also feeds into not just what we're seeing geopolitically, but what we're seeing domestically in Japan. Unpack for us how that has influenced the yen's role.
Absolutely. And the yen, from our analysis that we can see, is increasingly becoming very domestically driven, not just in terms of the demand side, but what's happening, for example, with Takaichi's surprise win, rate hike expectations being paired. All of this is influencing the yen. Now, remember, this is the world's third most traded currency. So it's very liquid. It's one of the easiest, if not the number one way that investors play the Japan macro story. So yes, absolutely. On news of jawboning from officials or indeed any form of changes in risk sentiment locally, it will influence the yen.
Ruth, talk to us about what we're seeing. I mean, data-wise, domestically, we did see, Tankan was strong, right? And then we saw maybe some question marks after Friday, some of the data coming in as well. How does this inform the path of the BOJ as investors also weigh out the politics in Japan?
Absolutely. And the Bank of Japan, in a way, is in a tight spot, right? Inflation on one side is very healthy in Japan. Growth is good. You know, the deflationary tag has been shed by Japan after decades of it. But at the same time, you've got the Takaichi win. Investors are markets are betting on a slower pace of rate hikes as well. So I would love to be a fly, for example, in the Bank of Japan's boardroom to see what they're saying and thinking, but they're definitely in a hard spot. It's not just a domestic story either. They'll definitely be looking at, for example, the Fed's dot plot, what's happening on a Treasuries front. So we'll have to see. We'll just have to see as the days go by and the auctions go by as to how it all plays out.
All right, Bloomberg's senior FX reporter there, Ruth Carson. Just capping the breaking news that we've had this hour, President Trump says Israel and Hamas have agreed to terms to release all hostages held by Hamas in Gaza. And Israel in return will release Palestinian prisoners and withdraw troops to an agreed-upon line. So some very encouraging news this morning in terms of reaching a ceasefire agreement in Gaza. Let's get now to Bloomberg's managing editor for U.S. economy and government, Mario Parker, joining us now from Washington. Mario, how much credit can the U.S. and President Trump take for reaching this agreement?
Well, if everything pans out the way that the president has said it is, I mean, it sounds like he should get a pretty hefty amount of credit. Steve Witkoff, who's been one of the chief negotiators, as well as Jared Kushner, the president's son-in-law, and recall, who was very instrumental in Middle East peace programs during the first Trump administration. Think about the Abraham Accords. He dispatched both of them to Egypt for these talks as well. And so this is the persistence that we've seen from the administration on this particular file. Also, I think if, again, with the caveat, if this does hold, if things proceed as the president has said they will, he would be in line for an enormous amount of credit here.
Mario, aside from credit, I think one of the key questions we all have now is, beyond the ceasefire, do we get lasting peace? What is your read into things?
It's still early to tell yet, but there's no doubt about it. This has been the most promising sign yet after we just hit yesterday, the two-year mark of this war, or since the initial October 7th attack. So this would amount to, recall last week, the president floated this 20-point plan. This is a first step as part of that 20-point plan to achieve a more lasting ceasefire. Again, if things unfold as the president has said they have, this is a very, very promising step, no doubt about it.
Mario, what can we expect to see in terms of next steps? There is a suggestion that the president might visit the region. When could we expect to see that happen potentially, and what might come out of such a visit?
Sure. Earlier this afternoon here, U.S. time, the president told reporters that he could go to Egypt as soon as this weekend. Subsequently, Press Secretary Caroline Leavitt said that the president would be going for a health checkup on Friday, a routine, what they called health checkup on Friday, and would then and is considering then proceeding to the Middle East. So that would be the next big step. Would be the president going there. The sign of the president actually going there would be a pretty huge signal. I mean, it would amount to he wouldn't go if there wasn't something concrete moving forward.
It would be significant. Mario, thank you. Bloomberg's managing editor for U.S. economy and government, Mario Parker, in Washington for us. We have more ahead on the Asia trade. This is Bloomberg. Mainland Chinese markets set to reopen today after the Golden Week holiday, but early figures show consumer demand cooled further during the 8-day break. Our China correspondent Min Min Lo joins us from Hong Kong. Min Min, what are you watching?
Hey, Avril, of course, we're watching the travel data that will be coming out of Golden Week. We don't have the full official data yet, but we have some preliminary data, as you can see on the screen here. The first half of Golden Week, retail sales up about 3.3%. This is pretty weak numbers if you consider that it's about half of the gains that we saw during the Labor Day holiday earlier in the year. We have cross-regional passenger trips up 6.2% on year. This is a pretty staggering number of 2.4 billion trips made during the Golden Week. But again, when you look at the year-on-year number, 6.2 pales in comparison to the 8% gain that we got during the Labor Day holiday as well. But flip report, we take a look at the box office numbers, and we're looking at upwards of 1.8 billion yuan in box office numbers over here, and that is falling short of what we saw in 2024. Bear in mind, 2024, that was an 8-day holiday. It's a 7-day holiday. This year we got an extra day, it's an 8-day holiday, and yet the numbers are still falling short of last year, and certainly much less than what we saw back in 2019 to 2021 as well. And you think about how the stock market actually has been sustaining a very long winning streak. It's the longest winning streak since 2018, 5 months of wins so far. The idea is that this would create a wealth effect so that people would feel richer, they would go out to spend more, but that's not what we're seeing in the Golden Week data, and perhaps it's because equity markets are still a pretty small fraction of household wealth, with a lot of people's wealth tied up in the property sector, and that still is in a slump. So you flip the board, take a look at how we're set up for Hong Kong and Chinese markets trading today. You look at the Hong Kong China Enterprise Index and how it's traded over the past week. It's down 0.3%. That sets us up for a pretty muted open when mainland Chinese markets reopen today.
All right, Bloomberg's China correspondent Min Min Lo there. Let's get some more on this. We're joined now by Deborah Weinswig, founder and CEO of Coresight Research, a consultancy focused on the global consumer and retail industry. Deborah, thanks so much for joining us today. And we just had Min Min there break down for us the rather tepid Golden Week data that we saw. We've seen a big stock rally in China. What's happened to this wealth effect? Why is it absent? Why aren't Chinese consumers more confident?
First, thanks for having me on. Secondly, I think we saw, similar to what we've seen in other markets, where the high-end consumer versus the mid to lower tier are just spending differently. So we've seen strength in luxury and travel, and weakness, as was alluded to, in the box office. And so I think it's really this tale of almost two consumers.
So what policies do you think would be needed to help those consumers that aren't spending that second level that you described there?
Yeah, I think it goes back to there is this real focus on value. So you need kind of more broad-based consumption. And I think anything that can be done to, just boost confidence, especially amongst the, kind of recent graduates. And so there's this, and I think that in China, there's so many different ways to find great deals, and there's almost this celebration in terms of, shopping as a sport. So I think that some of it was probably technology driven. I do think that, once again, we've continued to see this hinting at a more value conscious consumer. I mean, we also had, right, some weather events. So I think that, like, stripping out some of the weather events, that may have also been a more positive story, if you will, because I certainly know that our team at Coresight, right, we have teams in China and in Hong Kong, that they certainly pulled back their spending a bit, thinking that they may need to either spend to help their family, even like donate to charity. So I think there were some exogenous factors that particularly hit this Golden Week in a different way than we've ever seen before.
So there are some one-offs here, it seems. But what is your sense of, Chinese policymakers are trying so hard to stimulate consumption. You talk about that two-tier sort of spending. How important is it that perhaps, for lack of a better phrase, lower value consumers have that confidence to continue spending and up perhaps the value of purchases?
First of all, great question. And it's interesting if I think about the early days in, let's call it kind of 2022, when there was this greater focus on consumption across the consumer, right? You had in the kind of retail sector, you would have malls, right? Like every retailer working together to offer value to the consumer. So if they came in, right, there might be 100 pairs of shoes, free shoes to the first people there. But this idea that you were starting to build platforms throughout tier 1, tier 2, and tier 3 cities to really encourage consumption and celebrating kind of both local brands and national and global. I think that there was something like the consumer took pride and felt that they were helping things at a more macro level. So I will say that muscle memory is close, but I do think that we need to see more of this kind of platform approach, and it can be physical or digital, but I do think that that's the opportunity. I will say I looked at the numbers more favorably because we did see such strength in the higher end consumer. It's just kind of smoothing that out a bit, but I would say the numbers were 1% to 1.5% below what we expected, but I feared honestly that they could have been, even weaker.
So you're highlighting some of the ways, perhaps nationalistic spending that can be supportive. How else should businesses strategize and pivot to some of these trends that you're seeing?
So what we've continued to see is when different retailers, or even, right, travel was very strong. And so when you can have, and whether it's AMAP or any of the other kind of travel kind of, either the different travel platforms or whatnot, if the retailers' brands and other experiences could partner with them. So once again, some of the work that we've done, right, if you buy from this platform, you get entered into a lucky draw and maybe you win over here. And what we see is, and this is what I love about, kind of China commerce and consumption, is that there are so many different ways to get something to work. And it's just about clear communication of the value, making sure that you deliver, and then communicating kind of on the back end what the impact was. But I think that there needs to be more collaboration, more working together. And it can be domestic brands or, national and global. But also I think the more that they can lean into some of the travel, because travel numbers were certainly, I think, ahead of expectations across the board.
Deborah, great to get your insights on this as we watch the reopening of markets as well on the mainland. Deborah Weinswig is founder and CEO of Coresight Research. Now, of course, we've also been tracking developments on the Gaza peace plan and how Trump says that both Israel and Hamas have agreed to the first phase of this. Is, of course, a major breakthrough, but we are watching for further details on how things move forward. For the moment, you're looking at risk assets looking pretty bid up. I mean, this is also following on from what we saw in U.S. stocks overnight. They bounced back on the backdrop of some dip buying, but we also heard from Trump separately talking about how Israel will withdraw troops to an agreed line as a first step. And interesting also to see how safe havens have performed amid all this. We'll have more ahead on the Asia trade. This is Bloomberg.
We're tracking the growing fallout from the bankruptcy of auto parts supplier First Brands. Bloomberg has learned that Blackrock is looking to pull some of its investment from a Jefferies fund with significant exposure to the bankrupt firm's trade debt. For more on this scoop, let's get to Irene Garcia Perez, who leads our coverage on U.S. distressed debt and bankruptcy. So, Irene, what more can you tell us about this?
It's been quite an eventful day. All this relates to a bankruptcy of an auto parts supplier called First Brands Group. There's a hedge fund owned by Jefferies called Point Bonita Capital that had a massive exposure to the trade facilities of this company, and Blackrock was an LP to this hedge fund. So the company started to have, or the company's financial problems started to become more evident during the summer, in particular August and September. And so BlackRock started to ask for redemptions in those funds in the past few weeks.
Irene, we're also hearing how firms are looking to mitigate the fallout from this bankruptcy. Bloomberg reporting that the impact on Cantor Fitzgerald might involve a deal with UBS. What do we know about that?
Yeah, so UBS agreed with Cantor to sell them the O'Connor hedge fund business earlier this year. I think it was in May. But then this O'Connor hedge fund has a strategy, the working capital strategy, that is also exposed to First Brands. So on the back of that, Cantor just is seeking to renegotiate the terms of the deal and potentially leaving outside of this transaction the working capital facility, so they would buy other parts of O'Connor, but not this one that is exposed to First Brands.
Irene, thank you so much. As we continue tracking the fallout of the bankruptcy of this auto parts supplier, Bloomberg's Irene Garcia Perez for us. Now, let's take a look at how safe havens are faring. We are, of course, tracking the progress, the positive tone that the U.S. president has illustrated when it comes to the Gaza peace plan, and him saying that both Israel and Hamas have agreed to the first phase of this and that all parties will be treated fairly. So we're making some headway. There is a major breakthrough. We have seen gold spot already, even ahead of Trump's Truth Social post pulling back from the 40-60 level. And what was also interesting was how overnight we saw how risk assets climbed even along with gold rallying. So perhaps unsurprising, you're seeing a bit of that further pullback for the moment. Paul?
Okay, in a day of breaking news, we're just getting some more, this time from Hong Kong. We're hearing that HSBC is proposing to privatize Hang Seng Bank. So just getting a few lines on that at the moment. HSBC promising or proposing that it will privatize Hang Seng Bank. We'll bring you more details on that story as we get it. So that'll be a stock to watch when we get going in Hong Kong a little bit earlier. Hang Seng saying the scheme consideration looks at Hong Kong dollars 155 for every share held. So we'll keep an eye on that story, bring you more details as we get them. Avril, you're watching FX.
Yeah, let's take a look at how some of the currencies in the Asia Pacific are faring. I mean, we've been talking about the role of havens as geopolitics evolves, and, you know, some of our reporting also has been suggesting that reduced role when it comes to yen as a traditional haven. Certainly very cognizant of what we're seeing domestically in Japan as domestic politics play out and investors look for clues on what Takaichi's policies are going to look like. Overall, she's seen as someone that is going to be very pro-fiscal stimulus. She has also weighed in on what we're seeing in the BOJ moves, although she has walked back some of those comments from a year ago. So interesting to see how that plays out as well, as we see FX looking pretty flat for the moment. Markets open in Tokyo. This is Bloomberg. This is the Asia trade. We're counting down to Asia's major market opens. And Paul, what's also been really interesting is how some of these haven assets have been reacting to Trump, talking about both Israel and Hamas have agreed to the initial phase, the first phase of this peace plan.
Yeah, that is the big news of the past hour. News that there are a tentative ceasefire deal in place for Gaza. We'll see the return of Israeli hostages, the return of Palestinian prisoners as well, and the retreat of Israeli defense forces to an as yet undetermined line. But a lot of questions still remaining over this, despite the encouraging news, not the least of which is the disarming of Hamas, Avril.
Yeah. Paul, it's really interesting also how we've been seeing, despite the geopolitical backdrop, that risk assets have more or less been shrugging off these concerns. For the moment, you are seeing Japanese stocks tracking what we saw on Wall Street overnight, that bounced back 0.6 higher on the Nikkei at the moment, perhaps also fueled by the weakness we've been seeing increasingly creeping in this past week on the yen. We're hovering almost to that 153 level. Key questions on dollar yen and also on yen intervention. At what stage do officials see fit to step in? On the Japanese 10-year hovering just under that 1.7 on yields, Paul.
Let's take a look at how oil and gold are performing, very much as you'd expect at the moment. Brent's just open for trade, already slipping by a little bit more than 2/3 of 1%, 65.79 a barrel, and we've seen similar declines for New York crude as well. And look at the gold price. That's where we've seen some of the biggest moves today. Still holding on, though, above that $4,000 level. We're off about $30 from where we were before that tentative ceasefire agreement got announced. We're seeing Aussie gold miners slipping as well in Australia, the broader ASX in positive territory, but a couple of the big names, Evolution, Northern Star, both off about 2% at the moment, Avril.
Paul, let's get some analysis on what this is all going to mean for riskier assets. We're talking stocks with Fook Yap, Senior Investment Strategist at Standard Chartered Bank. So, Fook, really good to see you in the studio. You're coming in on an interesting day, given this Gaza peace plan that looks to be rolled out. We were talking during the break about how, stock investors have been shrugging the geopolitical backdrop off. So on the other side of things, when we do see headway towards peace, what do you think the play is here?
Yeah, I think from the financial markets point of view, the impact is probably limited. I think certainly on the humanitarian side, it's fantastic, and that's what we are now really focused on. But then on the financial market side, it's been driven really by many other things. I think we're looking at the U.S. government shutdown. We've got the earnings data coming up next week. We've got the AI the narrative all driving the markets. So the energy and oil and how that's impacted by what's going on right now, I think it's still a pretty well supplied market. I think the markets have been quite shrugging off any of the risk that might have been coming out of the region. So in terms of the impact on the market, I think we're probably not going to see that much of an impact at this point. I think certainly there's one in the Middle East, and there's still Russia-Ukraine ongoing. If that hopefully gets resolved as well, we might see actually a bit more of a risk-on sentiment coming through. But then at the moment, we just watch and see. I think there are other narratives which will be driving the market.
You talk about well-supplied. I think some would say it's oversupplied, right, in the energy markets. How does that affect your positioning when it comes to energy-related stocks?
Yeah, we do have sector views across US, Europe, and China. At the moment, we think we see a bit more value in the energy stocks in Europe. We've got a neutral view on energy sector in Europe. Dividend yields there are a bit more attractive. We're still underweight on energy in the US just because of the oil price, where we don't really see much upside. And compared to the rest of the market, we see the rest of the market are doing much better. Whereas because of the oil price and the energy sector linked to that, we have an underweight view on the energy sector in the US. And in China, we've got a core neutral view for energy sector.
What's your outlook for gold demand going forward? Because we have seen it pulling back a little bit on the encouraging news around peace in Gaza today. But there are still a number of major factors remaining, aren't there? There is the ongoing shutdown in the US, those other conflicts that you describe happening around the world. So is there potential for gold to continue rallying, or have we seen it played out now?
Well, I think the gold rally has been phenomenal, much faster than we were expecting. I think at the end of September, we put out our 12-month forecast at 4,100, and we're already approaching that now. So look, I think we are constructive on gold over the next 6-12 months. I mean, it is a risk it is a hedge for all the risk events, as you say, but it's also a central bank diversifying, central bank demand there. And we're going to a seasonal period. We're going to be seeing a strong seasonal demand for physical gold in India in Q4 and then Q1 next year as well for China in terms of the demand there. So I think seasonally strong central bank buying. I think it is positive for gold. Is it a bit stretched in the short term? I think possibly, but we are overweight on gold within our asset allocation. You know, on a 6-12 month basis, we are telling investors that it is positive. Our 4,001 target, I think, is something that we will have to look at and revisit, and we look at that monthly, but I think we're still positive on a 6 to 12 month view on gold.
Yeah, and despite your enthusiasm for gold, you still favour equities as well over bonds and cash. Where do you see the potential for the greatest upside in terms of equities, though? What sectors are you looking at, and are there any particular markets you prefer?
Yeah, thanks for that. I mean, we are overweight on global equities, and within that, we like the US and Asia ex Japan. I think we recently just upgraded the US equities to overweight. I think the valuation is there where we get a lot of pushback, and certainly that's been the case. But look, earnings revision, I think, has turned positive. I think that's extremely good for US equities. There's always earnings driving it, and earnings revision has turned positive, which is the breadth is widening. So that's one. And then two, you got rate cuts. Rate cuts coming through, even though we're near the top of the market. Historically, when the Fed cuts rate, even though it's near the top of the market, 1 year later, the market tends to end up higher. So we've got these supportive factors in terms of rate cuts and earnings revisions coming through that's supporting US. And then the weak dollar is another thing that we're looking at. And the weak dollar is supportive for Asia ex-Japan equities, and that's why we're overweight there. And valuation there is as well a bit more interesting. So within the Asia ex-Japan, what we favor is China equities. A lot of the AI story and the AI narrative can help the re-rating of the Hang Seng Technology Index there as well, we believe.
Why neutral on Japan? What would it take for you to change that view?
Yeah, I think we would want to see a bit more earnings revision coming through. I think this is very much driving our view. I think we were overweight, I think, earlier in the year, but then we turned neutral, I think, when we saw that earnings revisions were playing out. Look, the corporate governance, we believe, is ongoing in terms of the improvements and the buybacks. We see a lot of banks unwinding their cross-shareholding there. So we think that is positive. And then, of course, right now, in the last 6 months, we've been seeing a bit of a political uncertainty and how that might affect the yen. Our view is, I mean, on the equities, I think it's being neutral, and in the context of an overweight of global equities, we think it is going up. But it's just that we see a bit more driver. The hurdle to beat the US and Asia ex-Japan is quite high. That's our preferred market at the moment. That's why Japan is neutral for us, which is not negative by all means, I mean, because we are overweight on global equities.
You alluded to China earlier. We've been seeing data this week during Golden Week, maybe not up to some expectations, right? It's looking pretty tepid. Do you see this as perhaps a need for more forceful stimulus or structural reforms to take an even more convincing view on Chinese equities?
Yeah, no, thanks for that. This is very interesting. I think on the macro side within China, it hasn't been the best in terms of the deflation. We see these deflation forces as well. And the good thing is that policymakers are recognizing this with their anti-involution campaign right now. So on the macro side of the economy, perhaps it's not the best compared to China's history, but the market has been rallying a lot. I mean, China, last I saw, was up nearly 40% this year. And so it's actually the best performing market this year. A lot of that has come through from your valuation. Valuation was very depressed and it has been re-rating, and we expect that to continue. I mean, on the policy side, the question is really, I think, do you believe policymakers will do enough to stabilize the economy? Though they may not come out with a big bazooka to stimulate the economy, which is what the markets might want. They're not going to do that, but do you believe they're going to do enough? And we believe they will, right? At the end of the month, we'll be looking at a bit more policy announcement, hopefully. And again, we do not expect a big bang, but they will do enough and they will keep things stabilized. They've got the tariff fears initially, and then I think that has faded a little bit. But if the tariff fears come back, we do believe policymakers will step in and do enough to stabilize growth. But it's really a bit of the valuation re-rating because there's a big discount, and we see that narrowing, and that's being supportive of China equities.
All right, Fook, Hien Yap, a senior investment strategist at Standard Chartered Bank. Thanks so much for joining us. Got some more breaking news for you, this time on the deals front. We're hearing that Civitas is considering a merger with its Permian Basin rival SM Energy. And now, according to people familiar with the matter, this would be a merger of equals, therefore no premium, and the combined deal would be worth about $14 billion, including debt, and that would make it one of the biggest oil and gas deals of the year. This is according to data compiled by Bloomberg. So both Civitas and SM Energy have operations in the Permian Basin, also others in Utah and Colorado as well. So Civitas considering this merger with SM Energy. We have more ahead on the Asia trade. This is Bloomberg. Let's get you back to the big news of the past hour or so. This is the news of a tentative peace plan and a hostage release deal in Gaza as well. President Trump says Israel and Hamas have agreed to terms for the release of all hostages held by Hamas in Gaza. So that's about 20 people that were taken during those October 2023 attacks that are still alive. Also the remains of about 24 more who died in captivity. Israel is also expected to release about 2,000 Palestinian prisoners and withdraw troops in Gaza to an agreed upon line. That line has yet to be settled. So President Trump hailing this agreement, saying he's very, very proud to announce that Israel and Hamas have both signed off on that first phase of the peace plan. And Avril, we've also heard from Benjamin Netanyahu, the Israeli Prime Minister. He says with the approval of the first phase of the plan, all our hostages will be brought home. Says this is a diplomatic success and a national and moral victory for the state of Israel.
Yeah, it's also interesting what we've been hearing from the Qataris, right? And these different parties that have been involved in perhaps negotiating with both the Israelis and Hamas and in getting them to the table and agreeing to this 20-point peace plan, which was, of course, outlined by the U.S. president. We are hearing how Gaza suggests that this agreement could pave the way for that ceasefire. We're joined now by Bloomberg's Derek Wallbank for a bit more context on this. So, Derek, I think it's hard to overstate the breakthrough here that we're seeing on a conflict that has stretched on for so long. Put things in perspective for us.
Thanks, Avril. Well, this is very much a developing story, but sort of here's where we sit right now. We have statements from Donald Trump, from Qatar, from Israel, and from Hamas all saying that there has been a sort of agreement on the first phase of Trump's suggested peace plan. And what this sort of involves is an exchange where Hamas would release all remaining hostages, including the bodies of those no longer alive. And in exchange, Israel would release some prisoners that it is holding. Also, that there could be, some movement in terms of Israeli military to a fallback position that Trump has outlined in broad kind of terms. And that there could be ways for aid to resume. So all of that, as I say, we've gotten right now a signal that this has been agreed. We're looking for more details on exactly what's been agreed here. Those are the broad sort of outlines there. Obviously, details really, really matter in things like this. Now, Trump's plan went a lot further than just that initial exchange, but even movement toward an initial exchange would be notable. And it's so notable, in fact, that Trump told reporters at the White House he could even head to the Middle East in the coming days.
Derek, we heard earlier from Jonathan Panikoff of the Atlantic Council, and he was describing the sense of exhaustion on both sides, the scale of destruction in Gaza as well, and the relief at achieving a deal like this. But all of that good news notwithstanding, still a lot of sticking points here. I mean, Israel's not willing to release any prisoners that it holds in connection with those October 7, 2023 attacks. Also likely to be some sticking points as well around the disarmament of Hamas. So just give us a sense of how much more is needed to be achieved here to get a lasting peace.
Paul, you framed it very well, and those are not the only two areas of disagreement, right? But there are many more things that have to get resolved. Look, Trump put out a plan for how Gaza might be governed in a sort of like transitional technocratic way that could involve former UK Prime Minister Tony Blair. There's a lot sort of on the table here. Trump has envisaged this idea that Hamas basically has nothing to do with Gaza going forward, that it stop being a military force in that area just sort of entirely. Obviously, Hamas has its own views on what it should continue to be going forward, and so there is a lot of room for disagreement. Not least of which that positions in Israel have hardened in recent years about how it should respond to Hamas. So there is a lot to go here, and there's any number of ways that this could get complicated. But this is a significant move in and of itself.
Derek, thank you for talking us through what to watch out for next. Bloomberg's Derek Wallbank for us. Now, we are also seeing amid the market moves, safe havens have pulled back. We have seen oil prices also ease a little. Let's get more on commodities markets. Joining us now is Claudio Galimberti, Chief Economist at Rystad Energy. Claudio, really good to see you. Talk us through your initial reaction on what you're seeing in the markets. Is this a sort of knee-jerk? And what is your sense of, does this deal actually affect supplies?
Thank you for inviting me back, Avril. For sure, this is a positive news for the world, and for the oil market. What this means is that there's going to be further downward pressure on prices. Let's not forget that October 8th, 2 years ago, this was a huge increase in geopolitical risk premium, and that came on top of what had happened the year before with the invasion of Ukraine. So you had these two extremely important war theaters that have been going on for the past 3 years, and 2 years when it comes to Israel and Hamas and Iran, and this hopefully is coming to an end. Now, the oil market as a whole have been under downward pressure when it comes to prices from probably the most important factor has been the OPEC release of more production. But overall, what we are seeing right now, the first reaction is that the pricing, the Brent prices are indeed easing. So that's obviously very expected.
But as we've heard from some of our reporters in the past hour or so, the devil will really be in the details on how this peace plan is going to be rolled out. So is there a bit of a gap between what is expected and what the reality might be, and how might that go on to affect supplies coming out of the Middle East?
Absolutely. The devil is always in the details. We need to see how this plan is. This is the first phase, right? So the release of the hostages, and this is the first phase in the plan. It fits into a much wider conflict in the Middle East that pretty much pit Iran, which is one of the biggest oil producers. They produce close to 3.5 million barrels per day, against Israel. Probably the most important thing that happened in the past 6 months was the direct attack of Israel on Iran, and then the subsequent bombing of the nuclear site by the United States. And that, as a matter of fact, what that demonstrated is that Iran was not necessarily able to mount a huge military offensive. And as a result of that, already 3 months ago, when that happened, 4 months ago, the geopolitical risk premium decreased. However, what we need to bear in mind is that indeed Iran is a major oil exporter. Right now, they export 1.5 million barrels a day of crude directly into China, plus another 500,000 barrels of products that also go to China. So we're talking about 2 million barrels per day. If the deal is basically going to be signed and everything is going to normalize, perhaps, and I'm saying perhaps, we could see a further increase of production and export coming from Iran. That needs to be put against the whole nuclear deal, though. So there are many moving pieces here. What we can say about this particular deal is that there is less risk that Iran production facility are going to be targeted by Israel and by the United States in the next few weeks, and therefore, as a result of that, there is a decrease in geopolitical risk premium.
I wonder if you can give us your views on risk around shipping in the region as well, because we have previously seen other rebel groups, such as the Houthis in Yemen, targeting Israeli-linked businesses, also oil ships in the region over the Gaza war. With hostilities now optimistically looking to be about to cease, do you feel like the risk premium around shipping has changed?
That is a very good point, because the Houthis have been pretty much targeting all the ships going through the strait for quite a few years, and that resulted in huge disruption and in shipping needed to go around Africa. So that has been to some extent a boon for the shipping industry, because it's more businesses, but of course this is much more cost and so on and so forth. Now the Houthis obviously are supported by Iran. So a deal with Hamas, which end up impacting positively the relationship between Israel and the United States on one side and Iran on the other side, will probably bring about a normalization also of the situation with the Houthis, but I think it's way too early right now to make all this kind of assumption. What we know is that the situation with Hamas, between Hamas and Israel, is about to normalize. That's a very good thing, but there are many other points where this situation can flare up again. Let's not forget that Iran is now. Just a couple of weeks ago, there was the snapback procedure by the United Nations on Iran, because Iran was not compliant with basically all the terms of the nuclear deal. Therefore, if on the one side things are going down a good path, there are multiple ways in which this situation can flare up again. Of course, the big elephant in the room here, when we're talking about Iran, is always the Strait of Hormuz, because we have something like close to 20 million barrels a day of crude and products going through the strait, and that is always the danger when we're talking about Iran. But let's also look at history. In the past 50 years, there hasn't been a single point in time in which the Strait of Hormuz was blocked by Iran. And the reason is that everybody else in the world would be against it, even China. So no one wants the Strait of Hormuz to be stopped. So, but that is still a possibility, and this is something we need to bear in mind.
Yep. All right, to Claudio Galimberti, Chief Economist at Rystad Energy, thanks so much for joining us today. We have more ahead on the Asia Trade. This is Bloomberg. Let's take a look at how the major stock benchmarks in the region are performing on a day in which President Trump says Israel and Hamas have agreed to a hostage release plan as part of a broader peace agreement. Very much a risk-on tone. We are seeing some gold stocks losing ground. More ahead on the Asia Trade. This is Bloomberg. Well, we brought you the breaking news earlier that HSBC has proposed to make Hang Seng Bank go private. Bloomberg's Min Min Lo joins us now with the details. So, Min Min, what more do we know? And obviously, there's quite a bit of history behind this as well.
Yes, we don't have a lot of information at the moment, and certainly this is a very big news that is going to move markets later when Hong Kong markets reopen. But we know that HSBC has said that it is looking to buy out Hang Seng Bank to privatize the company, which is already currently a subsidiary of HSBC. They're planning to buy it out at 155 Hong Kong dollars a share, which is a 30% premium above the last close price of 119. And if you look at how Hang Seng Bank has been performing so far over the past year, it's actually been lagging behind its peers. At the current valuation that HSBC is proposing, that would push up Hang Seng's valuations. You can see year to date, it's gained about 23% or so. That's the white line lagging behind some of the other peers, including BOC and others. And this deal will likely cause a re-rating of some of Hang Seng's peers as well, given how high the premium HSBC is planning to pay for the privatization deal.
Min Min, you're alluding to some of this. I mean, what is the calculus for HSBC here in this potential move?
I mean, first of all, as you can see from the chart, Hang Seng Bank is relatively cheap. At the same time, HSBC is in a position of power as well because it's trading at close to record highs at the moment. And privatization deals are quite common, usually for companies to look at streamlining operations, some of the overhead costs in terms of things like marketing operations and so on. But you got to also think about some of the bad debt that Hang Seng likely has acquired in the Hong Kong property markets. This deal would allow HSBC to have direct control over how to resolve those debt issues and perhaps unlocking some of the hidden potential by combining the portfolios of both HSBC and Hang Seng, given that these are two banks that play in the same region in Hong Kong. So a lot of streamlining that they could unlock from combining both companies.
Min Min, thank you so much. Min Min Lo in Hong Kong for us, and stay with us for more on the Hang Seng Bank privatization plan and HSBC's global business. Straight from the top, HSBC CEO Georges Eldery is joining us exclusively live in the Hong Kong studio on the China Show. That's coming up less than 30 minutes from now. Paul?
All right, let's get to the outlook now for the global supply chain dynamics and evolving trade flows as well amid developments in geopolitics this morning, and also as President Trump's tariffs take hold. And this is even as many nations continue negotiating or trying to negotiate for better deals. Joining us exclusively now is Oscar de Bock, Global Forwarding and Freight CEO at DHL. Oscar, thanks so much for joining us today. And I do just want to start, if I can, on the big news that we've had this morning on the potential for some peace in the Middle East. I wonder if you can tell us how much business you were doing in that region and how it was impacted. And now, obviously, with the conflict potentially ending, is there an opportunity to get a lot of much-needed resources into that area?
I think in general, obviously, it's good news, and let's see obviously how it unfolds. But it's good news. It creates stability in trade, and not only in the Middle East. Obviously, there's an effect on global trade, and with stability on global trade, that actually has an impact on logistics flows as well. Apart from the impact that it might have in the actual flow through the Middle East or not, which we will see later on. In general, for us, the Middle East is an important region where we are investing in, and stability there will only help to accelerate growth further there. So I think, while still early days, I definitely read that as a good sign.
Well, perhaps more disruptive to global trade and your business in particular has been the tariff and trade environment more broadly. Can you give us a sense of how you've seen that changing and evolving since President Trump's latest trade war?
Yeah, no, I think, of course, that is the big topic in logistics flows around the globe. Obviously, we need to help customers to ride the waves of new regulations that are coming out every time. I was actually discussing earlier that if you actually put all the trade regulations together at the moment, you practically have a book since January to today, and we need to help our customers to actually sail that, literally sail through that, and make sure that when we do customs clearance, but also when the decision that they need to take on where to move from, when to move, whether to move certain production from one country to the other. The number of changes of flows that we've seen is enormous. The discussions that we're having with customers that obviously have to respond instantly to what's going to happen 2 months from now. You also see that the seasonality of a normal year is completely different now, because it's actually based on, okay, what tariffs are going to come, so what do we need to ship earlier? So you see that, for instance, high seasons start earlier, peak seasons start earlier because of that, depending on the products that we have. So the amount of changes in global supply chains and logistic flows is enormous. It is exciting as well, but it is obviously something that we continuously need to sit down with our customers, see what to do, see how to respond. And but at the same time, you see that global trade as a whole is still growing. It's just that the flows are different, are changing. So, for instance, you see a change of the flows, you see a growth if the flows intra-Asia, which is really important. You see, I'm actually dialing in from Bangkok. You see actually that the flows from Thailand towards the US is actually still growing. Last month with more than 10%. So, and that also has to do with the change of movements within Asia and then the movements towards the rest of the world. So, it is a really interesting time at that perspective, where you need to read on a daily basis, and on that basis respond with capacity planning, with applying to regulations, and making sure that we stay efficient in customs clearance and stay effective.
Right.
Yes, go ahead.
I mean, to your point about how trade is still, I guess, alive and well, it's just a matter of realignment. But you talked about this book of changing regulation. Among this changes in rules, it includes the removal of the de minimis exemption. Are you still experiencing or seeing some disruption from that? Can you tell us what exactly DHL is experiencing?
Yeah, you definitely see a change there, right? It means that the actual supply chain, or the actual way on how you distribute into the US is fast changing. So, because you now have to either, I'm going to be a bit technical here now, but rather than having small shipments going into the US from Asia and from anywhere in the world, you now have to basically consolidate. We call it a break bulk. So you basically ship larger quantities, then declare customs, and then you start to pick the order within the US and then ship from there. Or you create fulfillment centers in the US. So you basically, it means that you replenish large quantities into the US, then you pick the final order in the US itself through, for instance, in our case, through the fulfillment centers that we have spread around the US, and on that basis you ship to the final customer. So what you see is not only that the flow changes, but you also see that what's actually the activity within that flow changes as well. At the same time, time, the amount of customs clearance activity has evolved enormously. So we have made specific investments in not only resources in customs clearance on the ground, but also in systems to have for instance, AI tools to help us to declare and to be faster able to actually clear shipments.
Oscar, you talk about investments. We know how DHL supply chain bought IDS fulfillment. At what point does that become accretive? And what else are you looking at in terms of M&As?
Yeah, that's an interesting point you're making there. So that was, I would say, well timed, right? Because having a fulfillment business in the US helps our international customers just as much as our US customers, but specifically also our international customers, to have that fulfillment close to the end customer. And then with that, we're able to manage the total supply chain. So meaning, obviously, the flow into the US through air and ocean, and at the same time, then the fulfillment close to the end customer. And what I mean with fulfillment is the final picking and preparation of an order on the ground. But also it helps, as we said earlier, by doing the customs clearance in larger quantities, which helps to still be efficient. So it has been an important acquisition, well timed. Sometimes you have to be lucky as well. Although we did see the trend that local fulfillment is in any way an important trend in the US to help also our customers from Asia to ship into the US.
Are you looking at any other M&A or deals at the moment?
We always look. From an overall perspective, what we always look at is not so much to buy size or something, but always to look at specific expertise or specific activities that we can add to the activities of the DHL Group as a whole. We've done acquisitions specifically in the healthcare sector, which is a sector that we see growing really fast. We've created the brand DHL Health Logistics, and we've done specific acquisitions in that around the globe as well, which is another nice example of buying expertise to then be able to use our global presence, our global network, our expertise to then further grow that specific business that we would have bought. So it's those type of tactics, those type of strategy that you will see, that you will continue to see more of as DHL Group.
Great to have you on the program. Thanks so much for walking us through your plans and how some of these geopolitical developments have also been affecting the business. Oscar de Bock is Global Forwarding and Freight CEO at DHL. And we also have some breaking news for you. Of course, we've been tracking the continued fallout from the bankruptcy of auto parts supplier First Brands. We've, of course, been seeing a number of firms already being affected by this. From last week, UBS, more recently, Blackrock also seems to have been affected. We are now hearing that First Brands' creditor is seeking an investigation of vanished funds. That this specific creditor says up to $2.3 billion simply vanish, I should say, quote unquote. First Brands' financing partner, Rystad, has also filed an emergency motion on this. We continue tracking the fallout, and we'll bring you developments as we get them. We'll have more ahead on the Asia trade. This is Bloomberg.
Chip suppliers, including Tokyo Electron, are in focus after a US House committee said the industry's boosting China's semiconductor sector and supporting its military, raising the spectre of further export controls. And let's get to our tech correspondent, Annabelle Drawers, now in Hong Kong. I mean, Belle, we haven't heard from Tokyo Electron or ASML either. What's their response to this likely to be, and what's the impact here?
Yeah, I have to say, from a company perspective, they're really caught between a rock and a hard place right now, because these are companies that are heavily restricted on their sales to China, and they've already got a lot of restrictions in place. But it seems like from a US lawmaker perspective, they think that the rules right now just aren't going far enough. So the story we're talking about, it relates to the chip equipment suppliers, so companies who sell machinery that's used to make semiconductors. So names like ASML, as you said, they've got the most advanced technology on the market. Tokyo Electron, we're seeing today, actually it's moving a bit higher, but there has been that broader trend upward for tech overnight on Wall Street as well. But we did have the House China panel, essentially, which is a committee in the US House, and essentially it looks at China's activities, the effects of China's activities on the US, and then they make policy recommendations of that aren't legally binding in any way, but importantly can create that pressure for more rules. And the finding from this report that the House China panel has completed over several months is that they think that the current rules in place aren't going far enough, and so it does raise the risk that you have more curbs to come. So we did see some of the chip equipment makers like Applied Materials, for instance, falling overnight on Wall Street. Other names, Lam Research, for instance, KLA also in focus. But again, as I said, it is that broader trend upward today, which is why you're seeing Tokyo Electron in the green.
Yeah, rising 1% in Tokyo trade. Bell, amid the tension, the pressure between the US-China relations, as you just highlighted there, are tech firms perhaps pivoting to other places for investments? We're hearing how SoftBank's Graphcore, of course, this is a US firm, a UK firm, I should say, they seem to be pivoting to India.
Yeah, so India as a country, I mean, it's emerging as a potentially major AI arena, and we know that this is something that Prime Minister Narendra Modi really wants to see, that homegrown semiconductor industry, and the first made in China chips are actually expected to be ready by the end of the year. But the issue is that AI ecosystem in India is still relatively in its infancy, which is why investments like this one from Graphcore are so important. So as you said, it's a chip designer. It's owned by SoftBank. It's based in the UK. And next week, it's expected to travel as part of the UK delegation with Prime Minister Keir Starmer to India, where we've heard from sources they're planning to announce a $1 billion, rather £1 billion, so $1.3 billion US dollars investment into the country that would include a new R&D facility and plans to hire up to 500 people over the course of 5 years. So strong reaction that you can see there in SoftBank off the back of this today.
Yeah, SoftBank also pulling ahead in trade. Bell, thank you so much. Tech correspondent Annabelle Jolas for us there. Some of the top corporate stories we're tracking. Cisco releasing a new chip and networking system to connect AI data centers, a move that escalates competition with Broadcom. The company says the chip and routing systems allow for faster transfers of data across long-haul optic cables and are also much smaller than the previous version. Broadcom has taken a similar approach, unveiling its latest networking chip in August. Alibaba says it has established an in-house team for robotics, joining major global firms in a race to build AI-powered physical products. In a post on X, the Chinese e-commerce firm announced a small team for robotics and embodied AI. The team is housed within Quen. That's, of course, the unit responsible for Alibaba's flagship AI foundational model. We'll have more ahead on the Asia trade. This is Bloomberg.
We are counting down to the open in China, of course, after that Golden Week break. So to find out what's in store, let's get over to Hong Kong and our China correspondent, Min Min Lo. So, Min Min, in terms of potential catch-up when markets reopen today, what might we be likely to see?
Yeah, we are looking at what's happening in the U.S. as a proxy for how Chinese markets will reopen. So you look at this ETF trading in the U.S. that is tracking the CSI 300. It's looking pretty muted over here. And if you look at the Hang Seng China Enterprise Index that has been trading in Hong Kong as well, that's down 0.3%. So we're set for a pretty muted open on an index level when China markets reopen. And here you can see the blue line is the offshore yuan has been weakening as well. So we'll be watching the fix today when markets reopen, but not surprising that weakening there given how far the yen has moved so far over the past week. But you flip the board, although we're expecting a pretty muted open on an index level, there are some corners of the market that has been doing really well over the past week. You look at some of these mining stocks up about 12% on Jiangxi Copper. We could see a similar sort of catch-up move on some of these mining stocks in mainland China as well. But flip the ball, we're taking a look at how we're set up for Hong Kong. Overnight in the U.S., the handover from the U.S. was pretty strong after the NVIDIA story, right? The strong demand for the Blackwell chips, renewing a fresh wave of optimism over the AI trade. So over in Hong Kong, we'll be looking out for how the tech names like Baba, Baidu will be trading. And Baba in particular, something to watch because the company has announced that it's going to create its own in-house robotics team to participate in that global race for embodied AI. Here you can see overnight, it's pretty mixed. Baba and Baidu did not participate in the tech rally overnight. But flip the board as well, of course, something that we'll be watching very closely, Hang Seng Bank. Big news today, HSBC proposing to buy out the company and privatize it. And you can see over the past year or so, Hang Seng Bank, that's a white line here, it's been lagging behind its peers, but HSBC is planning to buy it over at a 30% premium, 155 Hong Kong dollars a share, a premium above its last close price, and that could potentially cause a re-rating of the banking sector in Hong Kong. Avril.
Min, thank you so much, Bloomberg's China correspondent Min Lo, for what to expect when mainland China comes back to trade in markets. But already we are seeing that rally in Asia stocks. Don't forget, we did see a bit of a pullback in the middle of the week, but the region's benchmark was already hitting some of the highest levels we've seen in a long, long time. Today, the weakness in the yen is helping to fuel, again, those gains in the Nikkei. Of course, part of this is to do with the Takaichi trade. Aside from that, also watching how S&P 500 futures have been reacting to potentially what we're seeing out of Gaza against the backdrop of a lot of risk appetite coming in, particularly for AI-related stocks. And they've been brushing off the risks surrounding, of course, the U.S. shutdown. So we did see, of course, that bounce in the U.S. overnight. And as we continue unpacking what the Gaza peace deal might look like, we are also watching commodities, and we are seeing some of those Brent prices easing off. Is that playing out in the ASX 200? We are seeing, though, energy-related stocks looking pretty flat. Paul?
Yeah, let's take a look at how some of those commodities are tracking. You mentioned oil. It is retreating from a number of factors at play here, though. It isn't just that good news that we've had out of the Middle East today. U.S. crude stockpiles have expanded again for a second week, although they are still hovering around seasonal lows as well. And it will be interesting to see how the security situation evolves around the Strait of Hormuz over the coming weeks as well, because, of course, other militant groups such as the Houthi rebels in Yemen have been targeting crude ships and other shipping as well in connection to that ongoing conflict in Gaza. Now take a look at the gold price as well, because it is actually off session lows now, even though it is weaker. We did see it hovering pretty close to that $4,000 level. It's rebounded off that now off by about 0.4%. We are seeing gold miners here in Australia also bouncing off session lows. Evolution now off 0.4%, and Northern Star, the biggest gold miner in the country, off by about 0.9%. Iron ore prices, meanwhile, holding pretty steady, about just below 104 a tonne, Avril.
Yeah, let's take a look at how FX is doing as well. Of course, we did see those slight moves in the dollar. Really, the questions here about how safe havens traditionally have been performing of late. The yen pulling away from that 153 level against the greenback. We are going to be watching how CNY fares against CNH when China markets come back to trade. And also stay with us for more on the Hang Seng Bank privatization plan, HSBC's global business. We get word straight from the top. HSBC CEO Georges Alderi will join us exclusively live in the Hong Kong studio. That's next on the China Show, coming up in the next hour. That's it from the Asia Trade. Our markets coverage continues. This is Bloomberg.